day all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Thursday, the 27th of June, 2019, about 3:50 p.m. Central Daylight Time. So we're not through trading in a number of the electronic markets. We have 10 more minutes, but as you can see, it's an interesting time in them because the markets are caught. They don't know what to do. I've been reading all day the demands of China to get the trade negotiations going and the demands of the U.S. I see them this far apart. Yeah, I'll move on screen. I don't see them close at all. I'm hoping that they can narrow up the differences to get the negotiators back to the table, but I don't think anybody has a handle on what's going on. In my newsletter, my market research, I've been writing about this, bringing my subscribers all up to date on what I see and how it seems to be progressing. But the metals are trying to figure out what does it mean for them. Now the copper we call Dr. Copper. Copper's up a little bit, which means there's a thought process by some traders, maybe they're informed, I don't know, that copper would go up if U.S. and China get back to the table. Copper being used by China, the largest consumer in the world, uses half the world's copper. Now, yes, we saw today also that there was another disaster, and I believe it was in a copper mine. I had heard first 19 miners killed, then I've heard 39. I don't know the impact of all that. But it's the only metal up today, so it might be a little bit of something there. But the real thing you have to do is figure out how do you position yourself over a weekend when the big event is Saturday at the G20, when President Trump and Xi get together and they either decide the negotiators go back to the table or they don't decide to do that. And then how do you protect yourself on a thinner trading Sunday night when the markets reopen? That's the trick. When we take a look at the weekly chart of gold, it's up $15 for the week. So even though it's down a little bit here and there, this market is up and away. When you look at what you've got on the chart, it's a pullback. We see that. It's still up $15 for the week. The trend is still up with the pattern of higher lows and higher highs. That hasn't changed. In terms of moving averages, the market is chasing the market, but the 18-day average, which I call that line in the sand, is $50 away from where current prices are, very close to that amount. That's a long ways off. In terms of resistance, formed by what we call the Bollinger Bands or support. The theory of this band is that, number one, it's an algorithm designed to keep the market trading within it 95% of the time. And yes, that 5% of the time can be successive days. But I've come up with a way that many of you that watch this know that I count each successive day above or below a band as pulling out one of those 5 percentage points. Does it work all the time? Of course not. Does it work a lot? Yeah. And the purpose is it's warning you that when you get up to these levels, you're on borrowed time. There might be a way to come into the market to the right-hand side of the band, which is often at a better price. Not always, but often at a better price. And that seems to be what the market's offering right now. What I don't like is the momentum of the market has been lost on the close today. If you take a look, both numbers were over 80 yesterday. The day before over 80, the day before. Well, why that's important is markets in the slow stochastic oscillator typically travel like this, between an overbought and oversold area. The traditionalist would think, and just how George Lane, who invented this, that you're getting overbought, you're getting oversold, look for a turn. I came up and I told George what I had found when he was alive. I said, I see something different. I see this so often on a chart that when you get several days in a row on that oscillator, it just locks in. And until the red line closes back under 80, and it often will do so before price, the market's locked into a bull trend. And that's what happened. You just lost it. So if price leads, if momentum leads price, I can see reasons for the market to back off. I'm also the first one to tell you I don't even know how to play gold going into the U.S.-Chinese talk on Saturday. Very difficult situation. When you come to the GLD ETF, higher lows, higher highs. Here too, the market has lost its embedded reading. This is closed already. So it's saying that price and the 18-day average may well make a run at each other. In GDX, you ran out of steam at the upper Bollinger Band. You're pulling back. Here you still have the embedded reading. And in looking at where the market closed in the range today, you're about towards the higher part of it. You closed not too far off the highs. That doesn't mean you have to lose that when the market reopens. Generally, if you close lower and at the bottom, it's an inkling if you're this close that you're going to lose that embedded reading. Can't get that out of this reading just yet. But if you take out 25, what is that, 25.05, I think was yesterday, yeah. If you take out 25.05, you'll turn the pattern to lower highs, lower lows. But because you're over the 18-day average, it's not bearish. It's a sign this bull leg came to an end. In the gold-silver ratio, and remember, I have moved now to August gold and September silver, you're up to highs you haven't seen in years. 92 ounces of silver for an ounce of gold. And as you can see, silver has got a pattern of lower highs, lower lows. The 100-day average of close became the first support level. If that gives ground, look for the 18-day to be the next support area. Trying to be short when you're over the 18-day average? No, I say that that's very difficult because while the swing line's down, the bias of the market is still to the upside. In the copper, you're still in an uptrend that is overbought, ran into resistance at the upper Bollinger Band. In the platinum, can you get more neutral than just keep hitting this 18-day average and not moving? You're spinning now prices. That's what you're doing in here in a narrow band. A trend is going to come out of it. Which way to go? Don't know. Some traders would use option strategies, buy a call, buy a put, and hope it breaks out big enough one way or the other. In the palladium market, you're knocking on the door of the highs. This market's first 1536.40. This is your all-time high. Remember, we had that big break and we came down, and I was saying, I think this market's basing here again. And as it turned out, the market did take off in conjunction with that embedded reading, and the market has worked itself higher. When this reading is lost, I'd get careful. You also had an outside day up today. So I think the pros will be looking very hard at today's lows. They don't want them taken out. If it's taken out tomorrow, it could be a sign that the market has run out of exhaustion against that old high. In the dollar index, you're getting a bounce, and you can see the resistance, the 100 and the 18-day average. So anything in this 96.24 to 25 area, that's a resistance point. You have a market where both numbers are under 20 today. Do you see that? Well, if I go to yesterday, they weren't. So you just have an oversold condition, not one that has begun the embedding process. I talk about this and a lot more in what I write and in my morning videos. Now, if you've never seen what I do, this is your opportunity to do it. I write a detailed report, but before I write the report, in the morning, I wake up 5:30, and I've read by 5:45, 6 o'clock, everything I need, and I start making recordings that look like this. The screens are completely different than what you see here. I'm going to have more studies on it. I'm going to talk to you in a different way than you do here. I'm going to say buy here, sell there, do this. Very, very specific. Then, at 11:30 in the morning Chicago time, Central Daylight Time, I write a report. And that report, I'm obviously putting parts into it during the morning as all the key reports of the government are coming out, and I'm seeing what's going on. Then I can put out trade recommendations with that. Now, some people, they want parts of this, they don't need it all. So I sell a full subscription to everything I've got. Then I sell a modified one with commentary only if some people want that. Or some people want just the morning video. They find that sets them up for their day of trading. Either way they want. But you get to see it all if you haven't. How? Go to our website. You'll see a carousel of free offers. Sign up for Ira's Market Research. We'll put it in your hands. You can also click up here if you're watching me on YouTube. It'll take you right there. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.